Okay, let's look at the global stock indices for the week ending of 9th September. Now we can start off with the Dow Jones Industrial Average. So as you can see over here, okay, last week there's rebound from a 2 weeks downtrend, but overall, if you can see, the the volume over here now in the rebound is not significant. So suggesting that the a strong rebound is not what is happening. So this again could be just a respite from the continuing downtrend that we have seen from the top. Okay, that was back in the 2021 December, right? So Dow Jones, nothing much that not no attractive trades in terms of risk reward ratio can be found over here in the Dow Jones Industrial Average. Now let's look at the Nasdaq. Nasdaq, okay, same thing over here. The volume has been decreasing, and if we look at the volume for the uptick, okay, that the Nasdaq composite component stocks has experienced. Okay, it doesn't suggest that we will see a major uptrend from here. The likelihood of that happening is quite remote. And do bear in mind that if we see this support, the support line over here for the previous support line, okay, it broke through, and so far we have not seen a break upwards. So it's better to kind of just hold on tight and see what happens after that. Okay. On the S&P 500, where the financial stocks are the main ones, you can see it's also the same thing. So in general, all the US stock markets, okay, the various sectors, is seeing the same thing. So although we have a strong uptick over here last week, okay, and it actually broke above the close, the opening of the previous week's um, market, but again, no strong volume suggests that there's no major move upwards expected, even though there's a talk of a 75 basis point increase in the interest rate that will be announced by the Fed in this month, okay, which is supposed to be beneficial for the financial stocks. But this could be a case whereby the major institution is fobbing off their stocks to cover their retreat from the stock market, at least based on quite a lot of the analysis out there. That is the case. So nothing major in the US stock market. If we look at, let's say, the European, maybe say CAC 40, the French ones, okay, they are rebounding off um, this support line, okay, over here, this particular support line over here. Okay, this is likely to be just in the process of formation. So if anyone wants to trade a tight range, then this could be a market to do that. But anyone who wants to do a major move, then it's best to look for a a breakout from this narrowing trading range. And a European stock market to look at would be the FTSE 100. So FTSE 100 and is very similar. In fact, and there's quite a lot of similarity across a few of the European stock markets. And over here, you can see that it's FTSE 500, as explained in previous videos. Okay. It forms a kind of a composite head and shoulder, with the right shoulder over here and the left and the head over here, and then looks like we are seeing a formation of the right shoulder. Although typically the right shoulder doesn't have a high that is higher than the left shoulder, but nevertheless it looks like this is what it is trying to convey, is that we are looking for a more bearish downside, especially with the very serious inflation going on in UK. So hang on tight and wait for confirmation of the formation of this head and shoulder. That would be a better choice in terms of what to do next. Moving on to Asia. Hang Seng has not been doing well. Okay. In fact, okay, it momentarily broke down, okay, below the high, okay, below the low set back in May. Now, this is not a good sign for the Hong Kong stock market. But if after their party congress in the communist parties in China, if after their party congress, if there's any good news and it does break out from this resistance line over here, then we can interpret that as a false breakout, okay, from the low over here back in May. And in that case, then we are likely to see the strong movement upward in the Hong Kong stock market. So, but before that, there's nothing much really that is going on in the Hong Kong stock market. And in general, I would say this is the case for the Shanghai Stock Exchange. Shanghai Stock Exchange, which comprise a lot of the large cap Chinese stocks, is more or less doing the same thing. There's not a lot of momentum over here, either upwards or downwards. Okay, even though it closes pretty strongly last week. All right. For the rest of the Asia market, now of course, Nikkei 225 is one that is often looked at, and as I mentioned earlier in previous videos, okay, there was a false breakout over here. Let's see if this week the Japanese stock market breaks above the resistance line over here. Okay, this particular resistance line. If it just breaks out, then it invalidates the potential the false breakout that is happening, and we might see a continuation of the uptrend over here. But there's also a very strong resistance across here, so even if it breaks above, there's not a lot of upward momentum over here, okay, and especially with the very weak Japanese yen. So watch out for what happens this week. if it does close below, okay, last week's uh, close, then there's a high chance that it will start to finish forming its head in the head and shoulder pattern. Now, the canary for the global stock market or the global economy is the Korean stock market. So you can see that it's still very weak, which is the general weakness that we've seen in quite a lot of the global stock market. So anybody who's trying to put in their cash into work, okay, in the long position, then not much of a reward at this point in time. There's more downside rather than upside at this point in time. And also you can see that we haven't seen any significant volume over here to suggest that major players are going into the Korean stock market. Okay? And the good thing is that so far, okay, this particular support line has been holding on. So if it manages to rebound, then it looks like it's going to be range bound for the Korean stock market. Finally, the Straits Times stock index. As I mentioned, that's in previous week's video. Okay, it is forming the right shoulder of the head and shoulder. Okay, so although we see a strong close last week, but nevertheless, um, given the light volume over here, likelihood of respite from the strong close is probably the case. But no, if there's any volatility, it's probably from the downside coming from the rate hikes for the September rate hikes that the FOMC is going to decide on. Okay, so that's it for the analysis.